Good morning. If you're just waking up to us, that is a picture of the New York Stock Exchange right now and the Dow Jones Index. We can see that it's going up steadily, 36, 37 points right now. Let's get more details on exactly what is going on with the financial markets today, and we can speak to Tyler Orton. Good morning, Tyler.
Good morning, Sonia.
So yesterday, as I was saying earlier, quite spectacular. We've got a slowdown in Chinese manufacturing, all the tensions going on between Saudi Arabia and Iran, all knocking those markets in quite a fashion. So what's it looking like today?
Well, it looks like there's going to be a little bit more stability. We had a lot of the global markets close already. Of course, they're a few hours ahead of us. And the words that people are using are, say, nervous or fragile. But keep in mind, the Chinese government injected about $20 billion U.S. into their equity and currency markets to bring about a little bit more stability. But if you look at where shares closed in Shanghai and Shenzhen, those stock exchanges there wasn't much, going upward at that point. So maybe we'll see some more stability. But there are concerns that maybe that's showing signs from the Chinese government that they are concerned, and that could trigger more thoughts about weakness going forward as well. And as you mentioned yesterday, Sonia, there were a lot of rising tensions between, say, Iran and Saudi Arabia. Any other day that we would probably see, the oil prices go up, but instead they stayed near, their 12-year lows that we've been experiencing for a little while now. And of course, that has a big impact on the Canadian economy. The dollar's down, and we just had the TSX open up a few moments ago. They're forecasting that it would open a little bit lower as well. So it's going to be a tough day for markets, but we are not expecting the same kind of losses that we were experiencing yesterday. We're expecting a little bit more stability today going forward. Okay.
Nevertheless, a lot of eyes on China to see what they're going to do next, right?
Oh, absolutely. Yeah.
I want to talk to you about a poll that's out today. Now, this is telling us that generally, as Canadians, we are not feeling that confident going into the new year with our finances.
Can you blame us, though, Sonia? I mean,
all the spending I've done over Christmas, I totally feel that one, yes.
Yeah. I mean, last year was a real tough one for the Canadian economy. And going forward, it's maybe no wonder that Canadians are feeling a little less confident, according to a new poll out from CIBC. Now, if we take a look at the numbers back in 2015, going into 2015, I should say, about 74% of Canadians were feeling confident about finances, which is still a relatively decent number. But that dropped about 5% over the past year. And going into 2016, only 69% of Canadians are feeling confident. Now, how does that stack up between provinces? It's interesting if we take a look at where BC is. Right now, we're 72% of us are feeling confident about our finances versus a year ago. And so there's a little bit of difference there. Not much, just that 1% difference. But in Alberta, that's where we see big declines, going from 83% confidence to 62% confidence. That went from the highest confidence in Canada to the lowest amount of confidence just over the course of 1 year. And when we see what oil prices have done over the past year, I can't really blame Albertans that much for for their own sentiment with regards to finances. For BC, however, both BMO and Conference Board of Canada, they're both forecasting that BC is going to have the most growth among all the provinces when it comes to the economy in 2016. And I think that maybe kind of gets reflected in our own sentiment with regards to finances going into the new year. So we're not the highest in Canada. That goes to Manitoba, Saskatchewan. But we do place second among all Canadian provinces when it comes to confidence going into 2016.
Well, we can only hope that that gets better. Tyler, thanks very much for that.
Thank you.